Raviji, what are the one or two sectors that you are looking with great hope for 2026? They may have already shot up, but still provide some opportunities on the long side.
So unfortunately for us, markets don't follow the calendar cycle. So it's not that on 1st January something will be available which will do very well till 31st of December. Some of the sectors have already started doing well. If you see, metals are clearly one area which has done very well, because it's primarily led by the fact that industrial metals have started doing well, whether it is aluminium, copper, silver. These metals have started doing well. So any stories related to metals, whether it is the converters or whether it is mining plays, they have started doing well, and derivatives of those will also continue to do well. Second area which we believe should do well and has already started doing well is the financials. Within financials also, essentially the call is that there will be releveraging in the economy, whether it is at the household level or whether it is at the corporate level, and that will lead to, and if you have a regulator who's very, very pro growth, then it's only a matter of time where the growth bounces back. So last year our credit growth fell from 15% to 9%, which has now bounced back to about 11.5%. I do believe there is scope for this 11.5% to go back to 15% kind of a growth rate over the course of next 12 months. And that should mean a good performance from the lending stocks. So whether it is banking or NBFCs, both are likely to do well. Currently, it is more NBFCs because we are still in a rate cut cycle, and in a rate cut cycle, NBFCs tend to do well. I do believe that rate cut cycle should end maybe with another 25 or maximum 50 bips cut, and that should lead to peaking out of the NBFC cycle, and banking cycle can start doing well after that. And already it's not, banks are the growth is the only challenge. If you see, the asset quality is not an issue. Fund balance sheets are quite well capitalized. So from that perspective, only NIMs and growth were two things that to be considered. NIMs have bottomed out, and if growth has also bottomed out, then the stocks also should start doing well. So financials and metals are two areas which have already started doing well. Third area, which I do believe, because of the steps taken already and the steps anticipated, consumer oriented stories should start doing well. I do believe that last 3-4 years their stocks have not done very well, and they have reached kind of a trough over there. And with the indirect tax cut and the direct tax cut, and with the interest rates coming down, it should give spur to some kind of a consumption cycle. And with next year the pay commissions lined up, there is a possibility that that consumption cycle continues. But the real driver of the consumption cycle will have to be the fact that private sector capex cycle picks up. If private sector capex cycle picks up, the job creation happens. Usually with a lag of couple of years after private sector capex cycle pick up, consumption cycle kicks in. So those are the things that we are looking forward to for the consumption cycle to. This year might be a year one, but the real consumption boom might be 2 years away, is what I feel.
If you like the video, do like, comment, share and subscribe.